I believe Apple will crash more than 20% during the next market drawdown. And I've been an investor in Apple since 2013. In fact, my next buying target is $150.32, more than 24% lower than its all-time high set in July of 2023. Why do I think that the world's most popular brand and one of the largest companies in the world could sell off this spectacularly? That's because Apple is a cyclical stock, and it regularly sells off that much and more. From January 2022 to January 2023, Apple sold off more than 30%. In September of 2020, Apple sold off more than 25% in a single month. And during the pandemic sell-off in March of 2020, Apple sold off more than 35%. Just looking at those example sell-offs, a 20% pullback in Apple's price wouldn't even be that dramatic. Why can a company as great as Apple see its stock sell off so dramatically so often? And how can such an outstanding long-term investment be so volatile? Apple makes amazing products and services, but its stock goes over large periods of time where it becomes overvalued. In other words, the underlying growth of the company is not reflected accurately in the stock price. The stock is worth much more than the underlying growth at that time. This is fine. The best stocks are always expensive. However, because a stock like Apple can become so expensive relative to others, it has the tendency to sell off even more during market drawdowns and systemic market crashes. But if I believe that Apple could sell off that much, why don't I just sell my entire position at these levels to buy it back at those lower levels? I've been investing in the stock market for more than 25 years. I started investing in 1998. Over that time, I've learned that it's actually true what the experts say. It's impossible to time the markets. With core holdings like Apple, I will sell a very small part of my position when we reach all-time highs. This way it frees up that capital so that I can add it back in if Apple sells off. If the stock doesn't sell off, that's fine. I've kept the vast majority of my position on the table so I can ride it higher. Since I first started investing in Apple in April of 2013 at $14.09 a share, the stock has risen so much that I have taken all of the capital out of my position. In fact, I took all of the capital out back in 2018. That's right. I've been playing with the house's money for more than 5 years, and I've continued to take profits out as Apple continues to make new all-time highs and exceeds the allocation target size for my portfolio. Instead of trying to avoid the pain of a systemic market sell-off, investors would be better served looking at these sell-offs as buying opportunities where they can add more to their positions. Systemic market sell-offs are fantastic because every stock is selling off for the same reason, as long as investors identify the specific sectors that are in the eye of the storm. In other words, the sectors that are responsible for the sell-off. Those sectors shouldn't be bought, but everything else is simply on sale. In other words, as long as Apple isn't the cause of the market sell-off, I will continue to buy in stages as it sells off further and further, because I do believe in Apple for the long term. As a long-term investor, you cannot think negatively about the future of companies, or else you will fail. Let me repeat that. If you do not believe that stocks will be higher in 20 years than they are today, you would be better served not investing. After all, why would you? If you're not optimistic about the future of a company or the market as a whole, then investing goes counter to everything you believe in, and you'll be more likely to make a mistake when there is a sell-off and take epic losses instead of sticking around. When it comes to investing, I tend to lean bearish because I've got the bull case already covered. I'm invested. If stocks go up, I make money, so I never worry about the bull case scenario. I don't waste time with it. Instead, I focus intensely on the bear case scenario. However, I'm not a negative person. I'm happy, particularly during market crashes, which actually make me giddy because I'm able to buy all these amazing investments on sale. I have faith in humanity and our global society to figure out any problem that encounters us, because that's what we've done. If the end of the world does happen, then it's not going to matter whether or not I'm invested or in cash. So why wouldn't I bet against the end of the world? As an investor, if you can't handle the cognitive dissonance of being both bearish and long at the same time without suffering physical or mental anguish, a diversified set of ETFs may be the better choice for you than individual stocks. Dollar cost average in, hold on for the long term, and ignore any of the gyrations that are happening in the market. These too shall pass. I started GetEarked 5 years ago as a way to teach people how to invest for free so that I could give back. If you appreciate my work, please consider liking my video. That really does help the channel out a lot. In fact, if you really like what I do, share this video with someone you care about who needs to learn how to invest for the long term. Thank you so much. I really do appreciate you spending this time with me, and I'll see you in the next video.